Section 19 of The Watergate Report, Volume 2. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 2. C. Disposition of the contribution and subsequent AMPI White House contacts in 1969. 1. Disposition of the contribution. Neither Nelson nor Parr expressed to the Select Committee any knowledge of, or for that matter, interest in, what was done with the $100,000 contribution. Seymour says that he felt certain that the money was going to congressional candidates in the 1970 election. Although, before the delivery of the money, Seymour and Kalmbach discussed the practice in prior administrations of, quote, piggyback contributions solicited by the White House for congressional candidates, there apparently was no discussion of the use of the contribution. And it remains undisputed that no Republican Congressional Fundraising Committee names were provided to Seymour or anyone else connected with AMPI at the time of the delivery or any time thereafter in 1969. In fact, the money was, according to Kalmbach, commingled with the 1968 surplus funds, which eventually went to Sloan in 1972 for the president's re-election campaign. Ehrlichman essentially confirmed this. In the meantime, part of the money was expended for such unusual campaign purposes as the political investigative work of Anthony Ulasewicz, detailed elsewhere in the committee's report, and the support of the candidacy of Alabama Governor Brewer in a 1970 state primary against George Wallace. 2. Contacts between AMPI and White House officials in 1969 after the contribution. The contribution was made in connection with AMPI's three goals, including, quote, access to the White House. Whereas Seymour had been in contact with Kalmbach for approximately 4 months before the contribution was made without apparent results, thereafter it only took several days to arrange the first of a series of AMPI White House meetings. Kalmbach testified, "It was clear in my mind that as a result of this contribution, or further contributions by Mr. Seymour and his clients, that meetings would be arranged for Mr. Seymour and his clients to meet with certain people within the White House to put forth his case on behalf of his clients." In fact, in the same August 2 diary entry referring to the milk producers' objectives, Kalmbach also noted, quote, Milt and clients to meet with Harry Dent and Jack Gleason, end quote. On August 19, 1969, Nelson, Parr, and Seymour met with Harry Dent in his White House office. Seymour testified that the purpose of the meeting was twofold: to have the AMPI leadership get acquainted with Dent, and to invite the president to attend the annual meeting of the Associated Dairymen, an association of the 3 dairy co-ops, AMPI, DI, and Mid-Am, of which Nelson was manager. At the August 19 meeting, they presented a written memorandum to Dent elaborating on the invitation. Parr testified that they felt that the attendance of the president at that annual meeting and at an AMPI convention would increase the stature of dairy leaders, particularly the then current leadership of Nelson and Parr. In a staff interview, Dent stated that he had no recollection of the meeting, and that if such a meeting occurred, it would have been a routine, quote, massage session. Kalmbach testified that he talked to Seymour 3 or 4 times after August, and perhaps contacted the White House to arrange Seymour's subsequent meetings with White House officials. Kalmbach testified, quote, I feel relatively certain that anyone who he met with, it was probably the result of my making calls to arrange such meetings, end quote. Kalmbach said there was no prior understanding of any favorable action that would necessarily result from such contacts, However, he testified that the top administration officials were all made aware that Seymour represented a contributor. Footnote. Kalmbach added that in the case of at least Mitchell, Haldeman, and Stans, they knew Seymour's client had contributed that year. In a staff interview, Mitchell said that at some point Kalmbach told him that he was receiving contributions from, quote, milk producers, unquote, but he said that this information made no impression on him, and he could not recall the date. As is indicated below, this represented only the beginning of what the Select Committee has found to be a continuing involvement through 1972 by Mitchell and Haldeman in solicitations of and contributions by the dairy trusts to the president's re-election campaign. End footnote. No more money was delivered to Kalmbach by AMPI in 1969. Kalmbach testified that he thinks the remaining $150,000 was not forthcoming because of the dairy people's dismay at not meeting with more White House officials. Kalmbach says Seymour told him that the, quote, response wasn't really what we had hoped for, end quote. The following year, the milk producers stepped up their lobbying efforts and communicated their intention to raise the level of contributions to, quote, $1 million, $2 million, or even more, unquote. D. Corporate funding of the $100,000 contribution. Sometime before the end of 1969, the milk producers instituted an elaborate scheme to conceal the $100,000 contribution delivered to Kalmbach. The scheme, developed by top AMPI employees, involved funneling several $100,000 through a number of lawyers and consultants retained by AMPI and using the laundered money to replenish the tape account from which the $100,000 was originally withdrawn. As a result, tape never reported the contribution, and Kalmbach and White House aides were free to use the contribution without any public disclosure of its source or public accounting for its disposition. 1. Nelson-Isham-Pearson meeting. W. DeVere Pearson, a former White House aide in the Johnson administration and a Washington attorney whose firm was retained by AMPI beginning in early 1969, advised the AMPI leaders sometime in the fall of that year that tape was required to make public reports to the clerk of the House of its contributions to candidates for federal office. According to Pearson, the AMPI people informed him that he was, quote, the only lawyer who has ever told us we have to report, end quote. AMPI officials realized in late 1969 that they had a problem. Since the $100,000 contribution exceeded the legal limitation of $5,000 to any one candidate or committee, they could not report it in the form it was made without admitting a violation of the Corrupt Practices Act. Footnote. The applicable provision prohibited a contribution of more than $5,000 in any one year to any one candidate or political committee. This limit was removed by the Federal Election Campaign Act of 1971, which became effective on April 7, 1972. End footnote. Kalmbach did not give them any committee names to permit lawful reporting, apparently because, according to Nelson and Jacobson, he didn't want the contribution reported at all. Since the contribution could not be reported lawfully or recovered from Kalmbach, AMPI officials decided to engage in a cover-up of the illegal contribution. On December 8, 1969, Pearson flew to San Antonio and met that night with Nelson and Isham in Nelson's office. Pearson says that although he was not told of the specifics, he understood from Nelson that tape had a reporting problem with respect to some contribution that either had already been made or was committed and was going to be made, presumably prior to the end of the year. It was decided that if it were possible to reimburse tape for the amount of the contribution before the end of the year, tape would not have to report the payment to Kalmbach. At the meeting, Nelson reportedly concluded, "I believe we ought to be able to call on friends of AMPI to help defray the obligation." Pearson says that Nelson then listed a number of attorneys and consultants, some of whom Pearson knew, as the friends who would be expected to participate. According to notes taken by Isham at the meeting, the $100,000 was to be recouped in amounts of $10,000 each from the following 8 attorneys and consultants then retained by AMPI: Pearson, Joe Long, Frank Masters, Stuart Russell, James Jones, Richard Maguire, Clifford Carter, and Ted Van Dyke. In addition, 4 AMPI employees, Lilly, Parr, J.G. Anderson, and Leo Suttle, were each to give $5,000, for a total from all 12 of $100,000. Footnote: a 9th individual, who was an associate at that time with the firm of Jacobson and Long, was also included in the list of attorneys and consultants with 2 question marks beside his name. Apparently he did not participate in the payback scheme. End footnote. The 12 were to recoup the money from AMPI in the following manner. The 8 outside conduits were each to bill AMPI $20,000 to cover the $10,000 payment plus their excess income taxes incurred because of the billing. The 4 employees were each to receive the $5,000 in the form of an expense advance from AMPI. Thus, the scheme would have cost AMPI approximately $180,000. Pearson himself agreed to make a contribution and to contact Maguire and Van Dyke, and AMPI people were to contact the others. Ultimately, the 4 employees did not participate, and instead, as explained in detail below, the money was paid back by the outside lawyers and consultants only, most of whom, it should be noted, claim ignorance of the scheme. The plan, as formulated and executed, involved the diversion of corporate funds for political purposes. Nelson does not specifically recall meeting with Pearson, but states that he authorized the plan and takes full responsibility for it. In the days following the meeting between Nelson, Pearson, and Isham, the AMPI officials began to implement their plan. 2. $100,000 loan to Lilly. Time was of the essence. Since TAPE was scheduled to file a report with the Clerk of the House covering the calendar year of 1969, TAPE had to be repaid the $100,000 by the end of the year. However, Pearson says that he told Nelson and Isham at their meeting that each conduit was permitted under the $5,000 a year contribution limitation to contribute to TAPE for the contribution in question only $5,000 in 1969 and a second $5,000 the following calendar year. However, this would have resulted in reimbursing TAPE only half the $100,000 by the end of the year. Therefore, it was decided at the December 8 meeting, or within a day or two thereafter, that AMPI employee Bob Lilly would borrow the entire $100,000 and repay TAPE before December 31, 1969, and that Lilly would then be repaid by the conduits over a period of time stretching into the 1970 calendar year. When Lilly was told of the plan, he protested to Nelson so vigorously that he almost lost his job. He suggested that AMPI could get the money back and recontribute it to 20 state Republican committees and thus comply with the $5,000 limitation without the use of a conduit scheme. According to Lilly, Nelson ruled out that alternative by telling him that the White House did not trust the regular Republican Party structure to transfer the money to Kalmbach. Footnote: Isham said in a staff interview before Lilly testified that he made a similar suggestion to Nelson, who told him that was impossible. End footnote. Lilly finally agreed to participate in the plan and borrow the money. On December 17, 1969, Lilly completed a loan application and borrowed $100,000 from Citizens National Bank in Austin, executing a 60-day note at an interest rate of 8.25%. Jacobson, who was chairman of the board, and two other members of the bank's loan discount committee, Morgan E. Pierce and Walter Donald Roberts, approved the loan. The loan was secured by a $100,000 certificate of deposit of AMPI and pledged by Lilly, who signed a security agreement on the 17th. Footnote: the CD was registered in the name of Milk Producers Incorporated, apparently issued to AMPI's predecessor several months previously, before the formation of AMPI. End footnote. Stettler, the bank president, says he does not remember whether Lilly had the authority to use co-op funds to secure a personal loan to himself. In fact, there is no evidence that any such authority existed. Lilly deposited the proceeds of the loan into the TAPE account on the same day. However, to replace the apparently defective pledge by Lilly of a corporate certificate of deposit, Isham, in his capacity as TAPE trustee, wrote a TAPE check dated December 19 to the bank to purchase a $100,000 certificate of deposit for TAPE, and then, in a second security agreement, apparently backdated to December 17, pledged that TAPE certificate of deposit in lieu of that of AMPI to secure the loan to Lilly. Thus, the transaction had gone full circle. Lilly had borrowed $100,000 and had repaid TAPE, which in turn had used the money to pledge a $100,000 certificate of deposit to secure the loan to Lilly. Since TAPE did not report the pledge of the certificate of deposit as of December 31, 1969, the contribution to Kalmbach had been concealed. Whereas the note was supposed to be paid in 60 days, it was not paid in full until nearly a year later. In fact, the cover-up of this and other corporate transactions and payments from AMPI to the conduits continued at least into 1972. 3. The alleged conduits. Based on his records submitted to the Select Committee, Lilly testified that he received the money to repay the $100,000 principal plus interest on his loan from outside attorneys and consultants named in the meeting of Nelson, Isham, and Pearson. Although each of the alleged conduits interviewed denied having knowingly participated in the plan to divert corporate funds for political purposes, there is evidence that at least some did so. Lilly testified, quote, "I felt that they knew that they could be reimbursed. It was quite obvious because bills were coming in." End quote. In addition, there is evidence that the AMPI Board of Directors was informed of the conduit scheme and the diversion of hundreds of thousands of dollars of corporate funds to cover the $100,000 contribution to Kalmbach and subsequent political contributions. According to Nelson and Lilly, the AMPI board was told at more than one board meeting that legal fees were high because some of the fees went to reimburse some attorneys for political contributions. Nelson believes that Stuart Russell and another alleged conduit, Frank Masters, as well as John Butterbrodt, president of the board, were present at those meetings. Footnote: Masters, an attorney for AMPI who attended nearly all its board meetings and helped prepare the minutes, denied that such discussions took place. One of the meetings at which the matter was allegedly discussed was the meeting in Las Vegas held in December 1970, which the board minutes indicated Butterbrodt attended. Kiefer Howard, an AMPI employee, says that he attended the meeting and that at least the matter of high attorneys' fees was discussed. Furthermore, he says that he believed that the money going to Lilly was used for political contributions. End footnote. Although Masters and Butterbrodt deny it, Russell, himself one of the conduits, confirms Nelson's account. The following is a description of the participation in the payback plan of each of the alleged conduits. A. Stuart Russell. Stuart Russell, a lawyer in Oklahoma City who has represented dairy cooperatives for many years, was retained by MPI in 1967 and then by AMPI in 1969 at a retainer of $1,000 per month plus an hourly rate for work done and expenses. Russell served as a conduit of co-op money to Lilly and others, and alone received over $300,000 in bogus fees to cover his payments and taxes, but he denied knowing the money went for political purposes. In December 1969, Lilly contacted Russell and said he was told to get $5,000 from Russell. After checking with Nelson and receiving his approval, Russell sent the money by check to Lilly on December 19. At the same time, according to Russell's longtime assistant and secretary, Jane Hart, a bill for $8,000 was sent to AMPI. The same procedure was repeated in January 1970 when Lilly requested and received another $5,000 from Russell, who then billed AMPI. Lilly made numerous other requests to Russell in the next 2 years to cover additional payments on the $100,000 loan and for other political purposes, including monies that Lilly made available to Jake Jacobson, which Jacobson represented were for John Connolly's use. In each instance, Russell or Hart either sent a check to Lilly or cashed a check, and Lilly came to Oklahoma City to retrieve the cash. On each occasion, a corresponding phony billing was sent to AMPI to cover the payment, plus Russell's estimated excess taxes incurred as a result of the billing. In all, Russell paid Lilly a total of $89,500 and other AMPI employees another $20,000, and contemporaneously billed AMPI $158,950. Jane Hart says that she billed AMPI for Russell's estimated excess taxes, but that, quote, there was no fixed amount or percentage, end quote, that was billed above the amount of the payment to Lilly. Footnote: prior to the issuance of the Wright Report, Jane Hart prepared an affidavit for submission to the Select Committee detailing Russell's payments to Lilly and others and indicating a total amount different from that reflected in the Wright Report. Subsequent to the publication of the Wright Report, Russell informed Wright by letter that the Wright Report's information was incorrect in that regard and submitted his own figures, which are consistent with those in the Hart affidavit reflected in the Select Committee's report. End footnote. According to Russell and Hart, too little was billed, so that in both 1971 and 1972, Russell was compelled to go to AMPI for more money to cover his taxes for the previous year. In April 1971, Russell was given an AMPI check for $50,000 to pay for his excess 1970 income taxes. The payment was apparently made in the form of a loan to Russell, who signed a promissory note payable to AMPI. However, there was an escape clause. The note provided that if Russell were to die, the obligation would be waived. Also, Russell's monthly retainer was increased from $1,000 to $6,000 to cover his monthly payments to AMPI on the note. Russell made only 6 payments on the note, totaling $16,666.68 in 1971. In April 1972, Russell again discovered that his billings to AMPI did not compensate him adequately for his excess 1971 income tax liability. In settlement of his, quote, claims, Russell was provided with another payment, approved by AMPI's new general manager, George Merrin, of $66,321.48, and the remaining obligation on the 1971 note, approximately $36,000 plus interest, was forgiven. Thereafter, Russell's retainer was eliminated, and he supplied legal services to AMPI and submitted itemized bills for his actual legal services only until October 1973, when his relationship with AMPI was terminated. In all, the committee has determined that Russell's billings to AMPI, not for legal services but for monies delivered from 1969 forward to Lilly and others associated with AMPI, amounted to over $300,000. Footnote. This includes the following: direct billings for payments to Lilly, $138,950. Direct billing for payment to Hollowell, $20,000. April 1971 payment, $50,000. April 1972 payment, $66,321.48. Excess retainer, April 1971 to March 1972, 12 times $5,000, $60,000. Total, $335,271.48. Less payments to AMPI on loan, $16,666.68. Total, $318,604.80. End footnote. Russell denies that he knew the monies he paid to Lilly were for political purposes. He says that he was told by Nelson at the outset that the monies were needed for legitimate legal services by AMPI, but that since AMPI management was being criticized by AMPI members for excessive direct, "home office" expenditures, he decided to account for the expenses as additional fees to Russell. Footnote. The co-op general and administrative expenses, including most legal expenses, were paid from the San Antonio headquarters budget. Thus, to some extent, Russell's explanation does not appear logical, since his fees, in lieu of someone else's alleged secret legal fees, were also billed to the "home office." End footnote. With regard to Russell's knowledge of the purpose of his payments to Lilly and others, Lilly testified that he told Russell that the payments to him were used for political purposes, and that in the fall of 1973, Russell told him that he hadn't submitted high enough bills to AMPI to cover the monies for political contributions. Moreover, Russell has told AMPI's attorneys that Nelson repeatedly stated to him that political contributions by attorneys ought to be treated as a cost of doing business, and that he expected attorneys to, "take this into account," in billing the co-op. Indeed, Russell admits that he attended an AMPI board meeting in Las Vegas in December 1970, at which Nelson said, according to Russell, that political contributions should be an expense borne by AMPI, not the attorneys involved. A contemporaneous note, allegedly written by Russell himself to Bob Lilly, indicates that he knowingly billed AMPI for at least one political contribution. In 1970, Russell gave $5,000 to Tom Townsend of AMPI, who in turn used it to make a political contribution. Footnote. Lilly testified that one payment of $5,000 in June 1970 and another of $10,000 in September 1970 were made by Russell in this manner. Townsend testified to one $5,000 transaction only in September 1970. End footnote. Lilly, who approved a number of Russell's phony billings, says that Russell then billed AMPI for the payment and enclosed with the bill a note addressed to Lilly, which Lilly provided to the Select Committee on November 14, 1973, explaining that the bill represented the payback to Russell for the contribution. If they were ignorant of these transactions at the time, AMPI leaders apparently learned shortly after Nelson was removed in January 1972 of the magnitude of the Russell transactions. As noted above, in April 1972, Russell received from AMPI a final settlement worth over $100,000 for his conduit activities. It is undisputed that Russell met with George Mehren, AMPI's new general manager, and Butterbrodt in late January 1972 to seek payment for his excess taxes resulting from transactions in 1971. They assured Russell that there would be no more of those transactions and agreed to meet his request. Although they claimed they did not know that the prior transactions were illegal, Mehren and Butterbrodt did not press Russell to tell them what he knew, and Russell apparently told them only that if he were called to testify in court about these transactions, he would plead the Fifth Amendment. Neither Mehren nor Butterbrodt assumed responsibility for any illegality in connection with the Russell settlement. Butterbrodt explained they had decided to honor all commitments of prior management and that he did not insist on disclosure because it was, quote, "not our obligation to investigate to find out whether there was wrongdoing or wasn't," end quote. Mehren says that he relied on opinion of counsel to justify the Russell settlement. End of section 19. Recording by Linda Johnson. Section 20 of the Watergate Report, Volume 2. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 2. B. Jake Jacobson and Joe R. Long. Jake Jacobson and his Texas law partner Joe R. Long admitted giving $10,000 to Bob Lilly, but denied recouping the money from AMPI. Lilly, however, says he received a total of $25,000 from them, and that they did recoup the money plus their excess taxes from the corporation. There is independent evidence obtained by the Select Committee staff after Lilly testified that tends to corroborate Lilly's account. The Austin, Texas firm of Jacobson and Long was employed by MPI in 1967 and then its successor AMPI for a monthly retainer of $2,500 plus billings and expenses for work done. Jacobson was subsequently retained by Mid-Am and DI in 1973. As discussed above, Jacobson was involved in the formation and organization of TAPE, the $100,000 contribution in August 1969, and the $100,000 loan by Jacobson's bank to Lilly in December 1969. On the same day as the loan to Lilly, December 17, 1969, Jacobson delivered a $3,000 check and Long a $2,000 check to Lilly. The checks drawn on the law firm account were made payable to Jacobson and Long respectively, and were endorsed by them and by Lilly. According to Lilly's records, he used the proceeds of the checks to pay $5,000 on the loan on the 17th, leaving a balance due of $95,000. In June 1970, Lilly requested another $5,000, and Jacobson and Long complied with a firm check dated June 12, 1970, from Jacobson of $2,875 and a firm check of the same date from Long of $2,125, again, each endorsed respectively by Jacobson, Long, and Lilly. Footnote: the December and June $5,000 payments were divided according to the ownership shares of Jacobson and of Long in their firm at the time, 60-40% in December and 57.5-42.5% in June. End footnote. Jacobson and Long each claimed that they were told by Lilly and perhaps Nelson that the money was needed to help Lilly repay a debt for TAPE that could not for some reason be paid by TAPE. Although Jacobson says that Long may have discussed with Lilly the possibility of billing AMPI for the payments plus taxes, both Jacobson and Long deny that they did recoup any of the money from AMPI. Jacobson explained that he gave Lilly the money, quote, as sort of a fee return, end quote, because AMPI was a, quote, good client, and it was worth the good business relations, end quote. Footnotes. Stuart Russell says that at one point he complained to Lilly about the amount of money and number of payments requested of him, and asked why Lilly couldn't ask others. According to Russell, Lilly said that Joe Long had made some payments too. This is consistent with a conversation between Nelson and Russell about conduit attorneys, during which, according to Russell, Nelson said that AMPI was paying Jacobson for political contributions. There is some evidence that in the spring of 1969, Jacobson had already counseled Isham to divert funds, in that case those of tape, for unreported cash contributions, but that Isham objected because 1. It wouldn't work because the tape monies would have to be accounted for, and 2. It would be illegal. Isham says that nothing more was said to him about the matter by either Jacobson or Nelson, to whom Isham says he reported the matter. It should be noted that the alleged Jacobson-Isham conversation may have taken place essentially contemporaneously with the Seymour-Kalmbach meetings, at which, by Jacobson's own account, it was understood that Kalmbach requested a $100,000 cash contribution and that it not be reported. End footnotes. There is evidence suggesting that, on the contrary, Jacobson and Long did recoup the payments plus taxes from AMPI at the same time or shortly after each payment. On the same day as the loan and the first $5,000 payment to Lilly, December 17, 1969, the firm of Jacobson and Long, located in Austin, 1. billed AMPI at San Antonio for $10,000 for work on a certain matter. Footnote. Less than 1 month later, on January 6, 1970, the firm billed AMPI another $10,000 for the same matter. End footnote. 2. was paid by the San Antonio Home Office the full amount, and 3. deposited the $10,000 in its Austin account. It was Lilly's understanding that after the first recoupment, Jacobson and Long billed AMPI for their subsequent payments to Lilly on a 3 or 4 week delayed basis. Thus, on July 16, 1970, 1 month after the June payment, the firm billed AMPI a total of $22,000, including what Lilly believes was a fictitious charge of $10,000 for a particular matter. Moreover, Lilly's records indicate, and he testified, that he received another $15,000 from Jacobson and Long to make payments on the loan. $5,000 on February 2, 1970, the same day Lilly deposited $10,000 in his account and made a $15,000 payment on the loan, and $10,000 on August 6, 1970. Although unknown at the time of Lilly's testimony in November 1973, the Select Committee has found in the records of Jacobson and Long independent evidence that tends to corroborate Lilly's account. On February 2, 1970, the same day Lilly says he received $5,000 from Jacobson and Long, Jacobson cashed a firm check for $3,000, and Long cashed a firm check for $2,000, for a total of $5,000. Footnote. This affidavit was based to a large extent on the results of an extensive search by Select Committee staff investigators of the records of Jacobson and Long in Austin. End footnote. On August 6, 1970, the same day Lilly says he received another $10,000 from them, Jacobson apparently cashed a check for $5,750 and Long another check for $4,250 for a total of $10,000. Although Jacobsen and Long say that these checks represented normal withdrawals from their firm and not additional payments to Lilly, neither can explain the reason that the checks were cashed or the disposition of the funds, or the coincidence that the amounts of the withdrawals equaled the amounts Lilly said he received from them on the dates involved. Lilly believes that the Jacobsen and Long firm billed AMPI for those payments, too, through billings of $10,000 on April 21, 1970, and $22,000 on August 21, 1970. Long says that these and the other billings discussed above in December 1969 and January, April, July, and August 1970 represented legitimate legal services performed by him for AMPI. Footnote: the firm's secretary from 1959 to January 31, 1972, Eula Bulkley, says that she did not maintain files on case matters for billing purposes, but billed clients according to whatever instructions were given to her by Jacobsen or Long. End footnote. Jacobsen's and Long's records reveal other transactions similar to those involving Lilly. For example, there are two other sets of checks in the same ratio as the June and August 1970 checks, and cashed by Jacobsen and Long, two checks totaling $10,000 on September 9, 1970, and two totaling $5,000 in February 1971, for which no specific explanation of the disposition of the funds was given. While the committee has not been able to determine what other use, if any, Jacobsen and Long made of these funds in connection with AMPI, there is evidence that they were involved on at least 3 other occasions with transfers of money totaling $20,000 to Lilly and another AMPI employee for political purposes, in addition to the two $5,000 amounts to Lilly for the repayment of his loan. C. W. DeVere Pearson. Originally a lawyer from Oklahoma City, W. DeVere Pearson came to Washington in 1965 to serve as chief counsel to the Committee for the Reorganization of Congress. In 1967, he joined the White House staff as associate special counsel, and in 1968 he became special counsel, primarily for domestic policy matters, including agriculture. When Pearson left the administration in January 1969, he went into private law practice in Washington, and his firm, at that time Sharon, Pearson, and Sems, was retained by AMPI for $2,000 per month, plus billings for particular casework and expenses, to monitor and provide advice in connection with certain federal administrative agency matters. As noted above, Pearson advised AMPI and DI of the reporting requirements of their political trusts and, in December 1969, attended the meeting with Nelson and Isham at which the payback scheme originated. He agreed to give some money to Lilly and to contact 2 others, Ted Van Dyke and Richard McGuire, whom he knew. Pearson says that upon his return to Washington after the December 8 meeting, he did contact Van Dyke and McGuire and told each of them that someone from AMPI would be contacting them. He says he heard no more of the matter until January 1970, when Lilly contacted him and asked for $5,000, to which Pearson had agreed as part of the payback plan. Pearson says that he wrote a $5,000 check payable to, quote, cash, dated January 26, 1970, cashed it, and gave the proceeds to Lilly. According to Lilly, he deposited the money on February 2, 1970, along with the $5,000 he allegedly received that same day from Jacobsen and Long for the purpose of making a payment on the $100,000 loan. Footnote: according to Lilly's records, he made a $15,000 payment on the loan the same day, February 2, 1970. End footnote. Pearson readily concedes that he was aware of the plan for the conduits to recoup the money from AMPI, but he denies that he did so. On the other hand, Isham understood that Pearson did recoup the money at the outset of the plan. Moreover, at the same time that Pearson agreed to participate in the payback plan, he obtained the approval of AMPI officials for a year-end payment to his firm of $8,500 and shortly thereafter a 100% increase in his firm's monthly retainer. In a billing from Pearson's firm to AMPI dated December 19, 1969, 11 days after the meeting and 2 days after the loan to Lilly, there is, in addition to the monthly retainer of $2,000 and disbursements of $16.21, a one-time charge of $8,500 for, quote, additional legal services in connection with legislative and administrative programs of the dairy industry, end quote, including certain listed topics. Footnote. Pearson addressed the bill to MPI, although it had merged into AMPI 2 months earlier. End footnote. Beginning in 1970, the firm's monthly retainer was doubled to $4,000, and it remained at that level until his firm was released by AMPI in early 1972. Pearson conceded that he discussed the $8,500 charge with Nelson at the December 8 meeting when the payback scheme was hatched, but maintains that it represented a legitimate charge for work done in 1969 in excess of his time compensated by the retainer, and that he had intended to discuss the matter with Nelson even before learning of the scheme. Footnote. Pearson also points out that even if the $8,500 payment was intended as a recoupment for his payment to Lilly, it would not have covered his out-of-pocket cost of $5,000, since he had only approximately a 25% ownership share in his firm. End footnote. While Pearson did not keep time records of his day-to-day general monitoring activities for AMPI, he did maintain time records for his casework on particular AMPI matters, which he says reflect an additional 150 hours of time during 1969. With respect to his increase in retainer effective January 1, 1970, Pearson says that he discussed the increase with either Nelson or Parr in late December 1969 to cover excess work in subsequent years and avoid the need for any year-end adjustments in the future. D. Ted Van Dyke and Kirby Jones. Ted Van Dyke, a former aide to Vice President Humphrey, was hired by AMPI in 1969 as, in Van Dyke's own words, an, quote, ambassador to the democratic liberal community, as well as a general consultant on public affairs. He and one of his employees, Kirby Jones, each paid Bob Lilly $10,000 and recouped the money from AMPI, but they deny knowing that the money was used for political purposes. Van Dyke served as one of the principal managers of Humphrey's 1968 presidential campaign, and in 1969 became a vice president of Columbia University. While at Columbia, he did some consulting work for AMPI, whose leaders, Nelson and Parr, had met while he was an aide to the vice president. In late 1969, he left Columbia and formed the Washington consulting firm of Ted Van Dyke Associates, which was hired by AMPI at an annual retainer of $25,000 plus expenses. In mid-1971, the retainer was increased to $5,000 per month. But in February 1972, the new AMPI management terminated the retainer. The firm also worked for DI from mid-1972 until October 1973. Van Dyke thinks that in December 1969, probably either Nelson or Parr contacted him and asked that he pay $10,000 to Lilly as added compensation which AMPI did not want reflected in the company's books. Footnote: a letter from Van Dyke to Nelson forwarding the first $10,000 payment to Lilly refers to a conversation between Van Dyke and Lilly, but Van Dyke does not recall speaking to Lilly. End footnote. Although he says he thought the request was unusual, Van Dyke says he had no reason to question the explanation and complied with the request. On December 22, 1969, 5 days after the $100,000 loan was made to Lilly, 1. Van Dyke mailed a $10,000 check to Lilly. 2. He mailed an invoice to Nelson covering the $10,000. And 3. AMPI sent him payment for the bill before it was received. Van Dyke said that the payment to Lilly and the billing and payment involving AMPI were all done simultaneously because Van Dyke needed the money in order to make the payment to Lilly before the end of the calendar year, as requested by AMPI. There the matter stood until March 1970, when Van Dyke sent an IRS Form 1099 to Lilly and the Internal Revenue Service reporting the $10,000 payment to Lilly as additional compensation. In a letter to Lilly at that time, he wrote, "As protection for both of us, you will be receiving a withholding slip for the $10,000, just as I received one. That closes the circle and keeps us beyond question." Although Van Dyke thought the matter was irregular, he says he had no reason to believe the transaction was anything other than as it was represented to him. The withholding slip caused a minor stir at AMPI because it forced Lilly to reflect the $10,000 as extra income and pay tax on it, though he, of course, had used the $10,000 to make a payment on the $100,000 loan. Footnote: it appears that Lilly was subsequently paid by AMPI to cover his excess taxes resulting from the report of the $10,000 from Van Dyke. End footnote. Van Dyke recalls receiving an angry call from Isham, asking him why he had reported the payment as compensation to Lilly. Despite Isham's call, which Van Dyke admitted raised doubts in his mind about the first transaction, Van Dyke was asked and again provided another $10,000 to Lilly the following summer. Van Dyke says that in September 1970, Nelson or Parr again called him and, as in the previous request, asked that he pay $10,000 to Lilly as additional compensation, but without reporting it as a firm expense. Van Dyke responded that his firm could not do so without filing another Form 1099, and when he was then asked to pay Lilly the money from his personal funds, he said that for him to do so and be compensated by AMPI for the payment plus his excess taxes would be too costly because of his income tax bracket. He says he was then asked if he could have an employee with a lower bracket act as the conduit. Van Dyke says that although he thought the matter was awkward, he asked his employee, Kirby Jones, if he would do so, and Jones agreed. Jones says that Van Dyke passed on to him AMPI's request, describing the similar transaction the previous year and AMPI's request that no IRS forms be filed this time. Jones, who did not have any contact with the milk producers, conceded that he also thought the procedure was unusual, but he agreed to act as the conduit because he was to receive at that point an extra $2,000 from the transaction to cover his future excess tax liability, which he planned to use temporarily for an upcoming trip abroad. On August 27, 1970, Van Dyke sent a firm invoice to Lilly covering what he termed the $12,000 quote, direct expense, and Isham wrote a check to Ted Van Dyke Associates dated September 4, 1970, in payment. On September 9, 1970, Jones sent a check for $10,000 to Lilly, and 2 days later, Van Dyke gave Jones a check for $12,000 with the fictitious notation, quote, "AMPI Convention Project," end quote. Jones later received from the firm a Form 1099 reflecting the $12,000 payment, and he duly reported it on his federal income tax return and paid the tax due. Both Van Dyke and Jones say that they did not know that Lilly had borrowed money for political purposes, or that the $20,000 was used to repay those loans or for any other political purpose. E. James R. Jones. Congressman James R. Jones, Democrat, Oklahoma, before being elected to Congress in 1972, was employed by AMPI from 1969 to 1972. It is undisputed that during that period he twice made payments of $5,000 to Bob Lilly for a total of $10,000, but it is not clear whether he knew the purpose of the payments or whether he recouped the money from AMPI. Congressman Jones was a member of President Johnson's White House staff, first as an assistant to Marvin Watson, the president's appointments secretary, and then in 1968, after Watson left, as Watson's replacement. While at the White House, he met Nelson and Parr, and when he left the administration in January 1969, he was hired by them pursuant to an oral agreement for 5 years at an annual retainer of $40,000 plus expenses to edit and publish the co-op's monthly magazine, Dairyman Digest. In addition, he was to receive a reasonable amount for other work performed. Although he had hoped to act as a general political and management consultant for AMPI, and did in fact coordinate some regional public relations activity for AMPI, Jones's primary responsibility was as editor of the magazine. He, along with a number of other AMPI attorneys and consultants, was fired in 1972 when Marin became general manager. During the 1969 to 72 period, he also maintained a private law practice in Tulsa, Oklahoma. In December 1969, Jones was asked by Lilly to contribute $5,000. According to Jones, he was told that farmer contributions to TAPE were not being made in sufficient amounts, and he was asked to make a contribution to TAPE. Jones says that he agreed to give $5,000 on condition that it be used to purchase tickets to Democratic fundraising dinners and that he and his wife be permitted to use some of the tickets. Jones says that sometime later, he and his wife did attend Democratic dinners using tickets purchased by TAPE. When Jones was first questioned about this matter by the Select Committee staff in December 1973, he recalled that he paid the $5,000 directly to TAPE. In fact, it appears that he paid the money to Lilly by check dated December 23, 1969, which Lilly used to help repay the $100,000 loan. More recently, Jones has stated that he made the check payable to Lilly as requested, but he could not explain why Lilly wanted the money paid to him. Jones did not remember making any additional payments to Lilly or TAPE, but when shown a copy of his canceled check dated May 5, 1970, in the amount of $5,000 and payable to Lilly, which Lilly used for his political loans, he acknowledged making the payment and said that Lilly had told him again that more money was needed to build up the TAPE treasury. In fact, by 1970, TAPE had over $300,000 in its account. Footnote: the TAPE reports, filed with the clerk of the House of Representatives, show receipts in 1969 totaling approximately $369,000 and cash on hand at the end of each reporting period in 1970 of over $300,000. End footnote. Jones says that although he edited the AMPI magazine and made speeches for TAPE to solicit new members, he did not know the existing level of TAPE funds. Footnote: Jones also says that he was subsequently asked by Lilly for a third payment, but that he refused because he understood TAPE had accumulated approximately $800,000 by that time. End footnote. There is also evidence that Jones, who acknowledged that the payments to Lilly were for political contributions, simultaneously received from AMPI amounts approximately 40% in excess of those payments. On December 19, 1969, 2 days after the loan to Lilly and 3 days before Jones's first check to Lilly, 1. Jones sent a bill to AMPI addressed to Bob Lilly for $6,890 for, quote, professional services and expenses, end quote, and 2. Lilly requested and Isham approved a payment to Jones for the invoice. On April 9, 1970, less than 1 month before the second payment to Lilly, Jones sent a bill to AMPI addressed to Lilly in the amount of $7,150, quote, for professional services rendered on special projects, end quote. 11 days later, on April 20, 1970, a check was written to Jones for that invoice. Jones conceded that he was short on cash in December 1969 and April to May 1970, and that the two invoices were submitted to secure the money to pay Lilly. A principal matter in dispute is whether he had rendered services for which he was legally entitled to additional compensation, or whether the billings were a device to recoup the amount of his payments to Lilly plus Jones's excess taxes. In the staff interviews, Jones asserted that the two billings represented additional work he did for AMPI, although in the 3-year period that Jones worked for AMPI, these invoices were the only special billings that Jones submitted to AMPI in addition to his monthly retainer and expenses. Subsequently, through his attorney, Jones submitted to the committee staff an analysis of his time records for 1969 and part of 1970 to justify the two billings. With respect to the earlier billing, he states that he estimated on December 19th that his services for AMPI in 1969 at a rate of $50 per hour for work in Tulsa and $70 per hour for work away from Tulsa would represent a total of $46,890, which he covered by the $6,890 billing plus the $40,000 retainer payments. Footnote. Apparently through an oversight, Jones was paid $6,980 by AMPI, $90 more than his December 19 bill of $6,890. End footnote. He says that he later found in 1970 that, in fact, his time for 1969 represented an additional $250. Therefore, when he estimated in April 1970 his excess services for the entire 1970 calendar year, he added $250 to $6,900, rounding off the $6,890 figure, and billed AMPI an additional $7,150. Footnote. According to Jones's attorney's analysis of the entire year, based on actual records for the first 7 months of 1970 and projections for the remaining months, during which he unsuccessfully ran for Congress, Jones's services represented a total of $44,750, or $2,400 less than he billed to AMPI. End footnote. This analysis apparently fails to take into account the fact that the April 9, 1970 billing refers to a, quote, special project, and neither Congressman Jones nor his attorney have explained what, if any, special project, apart from time spent on regular services for AMPI, Jones performed. Footnote. George Merrin of AMPI told the committee that it seemed to him that Jones's work on the Co-op's magazine, Dairyman Digest, consisted of arranging the covers and doing minor editorial work on the magazine, or as he put it, quote, "edit the editing." End quote. End footnote. Moreover, Nelson does not recall any work performed by Jones other than on the Co-op magazine, and although Jones claims his hours in 1971 amounted to an additional $39,000, he submitted no bills to AMPI for that work. Footnote. Jones's failure to bill AMPI regularly for excess time or other work may account for the fact that Robert Isham, AMPI's comptroller, was not even aware that an agreement existed whereby Jones could bill AMPI for such time or work. End footnote. F. Frank Masters. Frank Masters, a San Antonio attorney, has performed legal services for AMPI and its predecessor co-ops for a number of years. According to Lilly's records, Masters paid him a total of $6,000 in 1969 and 1970, which he applied to repay the original $100,000 and subsequent political loans. Masters acknowledges the payments, but denies that he knew of the conduit scheme or billed AMPI for the payments. According to Masters, Lilly came to him late in 1969 and asked him to make a substantial contribution in cash, quote, "to Austin," end quote. Masters understood Lilly to mean the Texas Democratic Party and its elected officials, although Masters says he was not aware of any campaigns in progress at the time. Masters says that since he knew that Lilly had spent many years in political work in Austin and assumed that Lilly might help bring Masters business or give him some influence at the state level, he agreed. Lilly testified that he made several requests of Masters, but that he did not mention state candidates. Instead, he says he told Masters that he needed money for political contributions. Footnote. If, in fact, Lilly referred to Austin, he may have been referring to his loan and account in the Citizens National Bank of Austin. End footnote. Although Masters denies billing AMPI for his payments to Lilly, he conceded that he never received either any acknowledgement from any party or state official for his contributions or any assistance for his law practice from Lilly. Although Lilly does not recall discussing with Masters the possibility of recoupment, there is evidence that Masters attended the Las Vegas AMPI board meeting, at which Nelson reportedly referred to high legal fees and use of AMPI attorney fees for making political contributions. While Masters apparently assembled over a period of time the cash he gave to Lilly, thereby making the tracing of the source of the funds virtually impossible, several transactions between AMPI and Masters at about the time of the loan to Lilly seem out of the ordinary. In addition to the regular monthly billings by Masters and payments from AMPI, Isham wrote a check dated December 2, 1969 to Masters for $5,397.96, but there is no record in AMPI's or Masters' files of an underlying invoice. On December 19, 1969, an AMPI check to Masters for $5,000 was made out, again with no invoice. Masters has no explanation for the December 2nd payment and says that the December 19th was an advance payment to him on services performed but not billed to AMPI. Although Masters says he talked directly to Isham to get the advance, there is no record at AMPI of any request or explanation for the check. Footnote. On December 20, an invoice for $4,200 that makes no reference to either previous check that month was submitted by Masters. On January 6, 1970, AMPI paid Masters for the December 20th bill, $4,200, plus bills for August, September, and October 1969, all three of which had been dated by Masters on November 4, for a total of $11,840, less the December 19th $5,000 payment termed an advance. The delay in paying the November 4th bills until January appears to be unusual because AMPI records show that most of Master's bills, both before and after November 4, were paid on the same day or within several days of their submission to AMPI. End footnote. G. Richard McGuire. Richard McGuire is a lawyer who was an official with the Democratic National Committee for a number of years. His firm was retained by AMPI in 1969 at a monthly retainer of $2,500. According to Lilly, McGuire made a number of cash payments to him in 1970 and 1971, totaling $10,000. Except in one instance, Lilly allegedly obtained McGuire's payments through another AMPI consultant, Clifford Carter. McGuire says he does not recall making any payments to Lilly directly or through Carter, and he knows of no conduit payback scheme. Lilly has reportedly informed AMPI's attorneys that McGuire recouped the money through an increase in his retainer, and Isham has confirmed this. Starting January 1, 1970, soon after the conduit scheme began, but before McGuire, according to Lilly's records, made any payments to Lilly, McGuire's monthly retainer was raised by AMPI to $4,000 a month, a jump of $18,000 per year, and continued for 2 years until terminated by AMPI. Footnote. It should be noted that Lilly could not identify from his records the source of certain cash payments, including a $5,000 payment on or about February 2, 1970. End footnote. With regard to the retainer, McGuire says that he assumed that because he had advised Nelson and Parr concerning the formation of tape, which had proven successful, they were rewarding him with an increase. H. Clifford Carter. Clifford Carter, a Washington, D.C. consultant who is now deceased, reportedly was a friend of Nelson and was retained by MPI and then AMPI for over 3 years, beginning in 1968. AMPI's records indicate that he received monthly payments of $1,000 plus expenses during that time. According to Lilly, Carter made several payments to Lilly, totaling $10,000 in 1970 and 1971, and, as noted above, Lilly usually received both McGuire's and Carter's payments from Carter at the same time. There is no direct evidence that Carter billed AMPI for his payments. However, in an invoice dated December 29, 1969, Carter billed AMPI $3,500 for, quote, services rendered for January 1970, end quote. This appears to be the only invoice of its kind that Carter submitted to AMPI while he was retained. Since Carter is now deceased, the committee has been unable to obtain necessary clarification of this bill and of Carter's knowledge of the AMPI conduit arrangement. E. Use of the conduit scheme for other corporate political contributions. After the $100,000 loan in December 1969, Lilly borrowed additional monies from the Citizens National Bank, also secured by a tape certificate of deposit, during 1970 and 1971 at Nelson's direction to make other political contributions, which were subsequently repaid with corporate funds laundered through the conduits, primarily Russell. Since TAPE had hundreds of thousands of dollars in funds available for political contributions, the question arises as to why corporate funds were used for political contributions. At least with respect to the corporate contributions to National Democratic candidates, detailed elsewhere in the committee's report, Nelson and Parr had a simple and telling explanation. They testified that they made such unreported cash political contributions because they feared that they would, quote, incur the enmity, end quote, of the Nixon administration if their support of key Democrats was detected by the White House. Footnote: AMPI, Nelson, and Parr have each pleaded guilty to violating 18 U.S.C. 371 for conspiring to make corporate contributions in violation of 18 U.S.C. 610 in connection with the 1968, 1970, and 1972 federal elections. In addition, AMPI pleaded guilty to 5 specific corporate contributions, including the $100,000 to Kalmbach. End footnote. End of section 20. Recording by Linda Johnson. Section 21 of the Watergate Report, Volume 2. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, please visit LibriVox.org. Final Report of the Senate Select Committee on Presidential Campaign Activities, Volume 2. 3. Contacts between AMPI and the President and administration officials in 1970, an alleged $2 million pledge to the President's re-election campaign. The milk producers were reportedly, quote, disappointed with the White House response to their $100,000 cash contribution in 1969. The following year, their lobbying efforts and contacts with the White House increased, as did the amount of their commitments. During 1970 and 1971, certain White House officials understood AMPI had pledged and then later reaffirmed its commitment to contribute $2 million to the president's re-election campaign, and at one point, a White House official reportedly told the milk producers that it was a $2 million, quote, package. During that same period, AMPI realized substantially all of its 3, quote, objectives articulated to Kalmbach in connection with the $100,000 contribution in 1969. In 1970, the administration granted the dairy industry the largest single milk price support increase by any administration at the start of a marketing year, and set dairy import quotas generally favorable to the milk producers. In 1971, the president reversed the decision of his Secretary of Agriculture and granted another price support increase. Within hours after the president's decision, the milk producers were called upon by top presidential aides to reaffirm the $2 million pledge, which they did just prior to the public announcement of the president's decision. Although industry and administration officials deny any quid pro quo linking the announcement to the reaffirmation, Kalmbach, at the direction of Ehrlichman, met with a key dairy leader and Murray Chotiner, who told him that the reaffirmation was linked to the announcement of the president's decision. Soon after the pledge was first announced to White House officials, the president personally called and met with the AMPI leadership, and at about the time some contributions were in fact made, he met with leaders of the other co-ops and later attended and addressed an AMPI convention. The event in 1970, especially with respect to the $2 million pledge and import quotas, are discussed in detail in this section, and those in 1971 with respect to milk price supports and dairy money for the president's campaign, Treasury Secretary John Connally, and the Ellsberg break-in in sections 4 and 5. A. Meetings with Colson, the $2 million pledge. 1. Meetings with Colson. Charles Colson joined the White House staff in November 1969 as special counsel to the president. By that time, the organization of the new administration, which was the subject of the early Seymour-Kalmbach meetings in 1969, began to take shape. In contrast to Seymour's expectations, he found that the White House was organized along essentially political rather than subject matter lines. Colson was given the responsibility for special interest groups, such as the dairy co-ops. Footnote: prior to entering a guilty plea to one count of obstruction of justice in the Ellsberg break-in case on June 3, 1974, Colson had refused to testify before the Select Committee on Fifth Amendment grounds. End footnote. Colson apparently had a great deal of antipathy for Seymour, dating back several years when both were partners in a Washington law firm. At about the same time that Colson began dealing with AMPI, it hired the law firm of Reeves and Harrison, one of whose name partners, Marion Harrison, was a Nixon state co-chairman in 1968 and a good friend of Colson. According to Kalmbach, Colson was probably instrumental in Harrison replacing Seymour as AMPI's lawyer for White House matters. Footnote: Seymour testified that he was told by Gleason sometime in 1970 that he was placed on a White House, quote, blacklist, in part because of his association with Senator Muskie, then the leading Democratic opponent to the president for the 1972 election. In the Select Committee's hearings, documents were disclosed that indicate that Seymour was on a White House enemies list. End footnote. AMPI leaders and Harrison met with Colson at least 3 or 4 times in 1970. In an apparent continuation of the efforts begun in 1969, the purpose of these meetings was twofold. One, to press AMPI's position to the administration on important substantive matters affecting the dairy industry, such as quotas on dairy products and milk price supports, and 2, to reiterate their interest in making substantial contributions to the president's campaign. 2. The $2 million pledge. A. Colson, a $2 million package. In the course of the meetings with Colson in 1970, the milk producers apparently indicated that the entire amount of their, quote, potential of $1 million per year, as Seymour had put it in 1969, might be translated into financial support for the president. Parr testified before the Select Committee on December 21, 1973, that in one meeting with Colson, quote, I just remember a discussion of about $1 million, and then somebody said $2 million. End quote. According to Parr, Colson said, quote, this is a $2 million package. End quote. Parr further testified, Mr. Dorson, do you recall what was said immediately prior to his saying he thought it should be a $2 million package? Mr. Parr, the best I can recall is that we were constantly talking about the numerous problems that dairy farmers were having, and that is all I can recall about it. Parr testified that Colson's remark was made in, quote, sort of a jesting manner, end quote. However, when asked to explain that testimony, he testified that he based his impression solely upon the fact that Colson was smiling at the time. The other dairy representatives apparently took the discussion seriously. Testifying before the Select Committee on December 18, 1973, 3 days before Parr, Nelson stated that he was present when Parr mentioned to Colson the $1 million and $2 million figures. Nelson stated that the two purposes of their meetings with Colson were, quote, to press the position we were seeking to have adopted concerning supports, imports, or whatever it would be at the moment, and to get the names of committees, end quote. Asked about his intent in discussing contributions with Colson, Nelson testified, Mr. Nelson, well, the matter of contributions was discussed on the basis that we wanted to support the president, that we knew we had not in the past, that we wanted to, we had the ability to, and if they would come up with the names of committees, we would go forward and do it. Mr. White, why did you tell Mr. Colson this? Mr. Nelson, it was our understanding that he also had something to do with fundraising. Mr. White, he was certainly aware, was he not, of your intention to contribute and, in fact, of your contributions? Is that your understanding? Mr. Nelson, Yes, sir, no question about that. Mr. Weitz: Did he raise the matter of contribution with you? Mr. Nelson: Well, he discussed the matter of contributions with us. I will say this: I think in order to be fair, we would have to say that they did not come seeking us, we sought them, because it appeared that we were not going to get any place if we did not. Most significantly, White House aides took the pledge seriously. Henry Cashin, who was deputy assistant to the president and beginning in September 1970 was supposed to assume Colson's responsibility for the dairy co-ops, told the Select Committee staff that Colson told him that the milk producers intended to contribute $2 million. Haldeman, too, knew of the offer of a $2 million contribution, although he is not sure who told him. Haldeman made a point of distinguishing to the Select Committee staff between a pledge and what he understood to be the milk producers' quote, declared intention to contribute $2 million. End quote. However, at another point in Haldeman's statement to the Select Committee staff, he referred to the dairy producers' quote, pledge. B. $2 million and the re-election campaign. Shortly after the pledge was made to Colson, the White House began preparing for the president's re-election campaign. Not surprisingly, the milk producers and their pledge began receiving a great deal of attention. Kalmbach testified that in mid-November 1970, he met with Haldeman to discuss early fundraising for the president's 1972 election. Haldeman stated that he believes Attorney General Mitchell was present at that meeting. Kalmbach was to act as the principal fundraiser, particularly for large contributions, until a finance chairman for the campaign was to be named in 1972. Essentially contemporaneous with the Haldeman-Kalmbach meeting were one or more meetings at which the details of the anticipated $2 million milk producers' contribution was discussed by key White House officials and Republican fundraisers. Kalmbach remembers attending two meetings during the fall of 1970 with the milk producers, the first in October in Colson's office and the second in November or December in the Madison Hotel. Although the existence of an October meeting cannot be corroborated, it is essentially undisputed that in mid-November, probably November 19, Colson, Kalmbach, and Tom Evans, a former law partner of Mitchell and Nixon and assistant finance chairman for the 1968 Nixon campaign, met with Nelson, Parr, Harrison, and Patrick J. Hillings, of counsel to Harrison's firm, in the Madison Hotel. Footnote: The Select Committee staff first received testimony about this meeting on December 4, 1973, from Marion Harrison. The Select Committee has fixed the date of the meeting in the following manner. Kalmbach does not remember any instance in which he stayed in a Washington hotel other than the Madison Hotel. The records of the Madison Hotel for November 1970, subpoenaed by the Select Committee, indicate that Nelson rented a suite of 3 rooms for the night of the 18th, Kalmbach 2 rooms for the 18th and 19th, and Evans 1 room for the 18th. There were no rentals recorded for those persons at any other time that month. Nelson testified that the meeting took place immediately after a meeting between Nelson and Secretary Hardin. Since the staff has uncovered a letter from Harrison to a USDA official dated November 20, 1970, apparently referring to such a meeting on the morning of November 19, 1970, the November meeting in the Madison Hotel appears to have taken place on the 19th. End footnote. Since it was understood that the trusts were reporting their contributions to the Clerk of the House, the discussion centered on the way in which, despite these reports, publicity in connection with the anticipated $2 million contribution could be avoided. Kalmbach testified, quote, "We were trying to develop a procedure where they could meet their independent reporting requirements and still not result in disclosure." End quote. The result arrived at was for the milk producers to break down the $2 million into numerous smaller contributions to multiple committees in various states, which could then hold the money for the president's re-election campaign. In that fashion, the milk producers could report the contributions, including information on the recipient committees, without the ultimate beneficiary, the president's campaign, being disclosed. Nelson said that he realized several hundred committees would be needed for such a large contribution, particularly in view of the $2,500 limit per committee per year placed by his lawyers, Harrison and Hillings, on the contributions. Footnote. According to Lee Nunn, vice chairman of FCRP, the $2,500 maximum was set so that in the event the milk producers mistakenly made two contributions to the same committee in one year, they would not violate the $5,000 limitation in the Corrupt Practices Act. End footnote. Kalmbach testified that this use of multiple committees was not unusual. Even 750 or 1,000 committees would not have been too many if needed to accommodate a large contributor like the milk producers. Kalmbach is sure that he reported the substance of these meetings in October and November 1970 to Haldeman. This is corroborated by Haldeman's statement that he was aware of the expected contribution. Following the meeting, there was a period of several months during which no substantial progress was made in forming the committees and making the contribution. Activity in that area was increased in March 1971, at the time of the president's deliberations on the milk price support matter discussed in greater detail in Section 4. B. Contacts with the president, the $2 million pledge. Haldeman conceded to the Select Committee staff, quote, "Obviously, an offer of a $2 million contribution is a matter of interest, and the question, if not spoken, automatically arises as to why." End quote. Haldeman went on to say that he was told the money was to be a campaign contribution and not a bribe or a quid pro quo. He acknowledged, however, that he was unaware of the meetings between Colson and AMPI in 1970, at which both administration action and campaign contributions were reportedly discussed. Haldeman also stated, "I have a general belief, assumption, that the president was aware, and I cannot tell you when, that the milk industry had indicated their intention of providing campaign support." The White House conceded in January 1974 that the president was informed directly by Colson in September 1970 of the $2 million pledge. Shortly after the pledge was made, AMPI leaders succeeded in obtaining several sought-after goals, including personal contact with the president and favorable action on dairy import quotas. 1. President's call to Nelson. Parr testified that the AMPI leadership had been trying to see the president since the beginning of the administration. Nelson testified that by making contributions, he hoped to get the president to attend AMPI's first annual convention in Chicago in September 1970. The strategy did not work in 1970. The date of the convention, September 4, 1970, fell at a time when the president was hosting the president of Mexico at San Clemente. Instead, the president personally called and spoke by telephone to Nelson at the convention. Footnote. The White House White Paper, entitled, quote, "The Milk Price Support Decision," end quote, and released January 8, 1974, hereafter White Paper, terms the call a, quote, "courtesy call of a type frequently made by the president." End footnote. Nelson testified that the president made 3 points. 1. He told Nelson that he had instructed Secretary of Agriculture Clifford Hardin, who attended the convention in lieu of the president, to announce the renewal of the school milk program. 2. The president expressed his desire to attend AMPI's next convention. And 3. He had talked with Hardin, who had suggested that he meet with dairy leaders at the White House. Nelson relayed this information to those present at the convention. The first personal meeting between AMPI leaders and the president came 5 days later, fulfilling one of AMPI's three, quote, objectives as stated to Kalmbach the year before. 2. Presidential meeting with Nelson and Parr. On September 9, 1970, Nelson and Parr met briefly with the president in the Oval Office during an, quote, open hour reserved for brief courtesy meetings between the president and groups and individuals. Nelson assumes Colson arranged the meeting, and Parr believes that Colson was present. At the meeting, after photographs were taken, Nelson and Parr mentioned their successful convention, and the president told them to work with Hardin in setting up another presidential meeting with more dairy leaders. The white paper says that, although money was not discussed in the meeting, it is evident that raising and making political contributions to both Democrats and Republicans were important, continuous, and conspicuous activities of the dairymen during 1970, 1971, and 1972. Colson helped to make this activity conspicuous to the president. The White House has acknowledged that Colson, in a memorandum attached to a briefing paper to the president for the September 9 meeting, asserted that AMPI had pledged $2 million to the president's 1972 campaign. The White House, in its white paper, has stated that it is unknown whether any such pledge was made. It should be noted, however, that the White House has in its possession the Colson memorandum and other evidence, such as a later internal White House memorandum to Haldeman that specifically discussed the original $2 million commitment of the milk producers. The committee's efforts to determine the extent of the knowledge and participation of the president and his aides in this political fundraising effort have been hampered by the refusal of the president to honor the Select Committee's subpoena, as well as numerous informal requests for White House materials relating to dairy trust political contributions. This refusal has extended even to materials for which no claim of executive privilege or any other privilege has been asserted by the president, and which have been produced to a private litigant in the course of the suit challenging the president's 1971 price support decision. Some, but by no means all, of these materials have been made public by the parties in connection with that litigation and have thus become available to the committee and are discussed in the course of this report. But the committee cannot determine the extent to which the additional withheld documents would shed further light on presidential and White House involvement in the matters under investigation. Even the White House description of withheld documents relating to the Milk Fund investigation is incomplete. For example, the Colson memorandum to the president for the September 9, 1970 meeting referring to the $2 million pledge is described by the White House in court papers as follows. Quote, an undated briefing memorandum for the president from a presidential assistant relating to the referenced meeting. End quote. Footnote. All committee efforts to obtain from the White House further materials have been unavailing. In Nader v. Butts in the Federal District Court for the District of Columbia, the plaintiffs subpoenaed documents from the White House relevant to the 1971 milk price support decision. On December 5, 1973, J. Fred Buzzhardt, special counsel to the president, filed an affidavit listing the materials covered by the subpoena in two categories. Category 1 consisted of those items as to which no claim of executive privilege was asserted and copies of which were provided to the parties. Category 2 consisted of documents as to which executive privilege was claimed and copies of which were given to the presiding judge, Judge Jones, in camera for his inspection. The judge made no ruling on the applicability of the privilege claim on Category 2 documents. The White House at first assured the committee that it would produce Category 1 materials to the committee, but not Category 2. Therefore, on December 18, 1973, The committee subpoenaed specifically only Category 2 materials from the president. The president refused to comply. Thereafter, the White House refused to produce for the committee even Category 1 materials. Accordingly, on January 14, 1974, the committee subpoenaed plaintiffs' and defendants' counsel for production of the Category 1 materials, and although they declined to comply because of a previously entered protective order prohibiting release of the materials except in connection with the lawsuit, on January 30, 1974, plaintiffs' counsel did move before Judge Jones for a clarification or modification of the order to permit him to comply with the committee's subpoena. The committee filed a motion for leave to intervene as amicus curiae for purposes of plaintiff's motion, which was granted by Judge Jones, and only the White House, not the parties to the suit, opposed plaintiff's motion and the committee position. Indeed, as the committee argued in its brief, there was no applicable privilege or any other tenable basis to withhold production. Nonetheless, on March 13, 1974, Judge Jones denied plaintiff's motion and effectively blocked the committee's effort to obtain the materials. Although these non-privileged materials had already been denied the committee by the president, Judge Jones stated that, quote, "whether the president would refuse to turn over the material is unknown," end quote. While conceding that the materials were not privileged, he stated that he had the obligation to, quote, "consider the integrity of the criminal process with respect to any resulting indictments involving the issuance of milk price orders in 1971," end quote, despite the fact that the materials had already been produced to a private litigant, and some of which had even been made public, and no indictments had yet been filed. He apparently concluded that he would take no part in ruling on compliance with a valid congressional subpoena. These court papers are reproduced in Part 2 of the committee's appendix of legal documents. Some of the White House materials, sought by the committee and publicly released by the House Judiciary Committee after the drafting of the Select Committee's report, are reprinted in Appendix D to this chapter. End footnote. The White Paper goes on to say that in the memorandum, Colson suggested that the president acknowledge AMPI's, quote, "support." While the Select Committee has no way of verifying the accuracy of the statement, the White Paper assures the public that no suggestion was made in the memo that the president commit himself to do any, quote, "substantive act," end quote. Footnote. It does not define, quote, "substantive act," end quote, or state whether there was any suggestion in the memo that the president commit himself to any matters such as permitting greater access by the dairy co-ops to the president, scheduling presidential meetings, or presidential attendance at dairy conventions, and the like. It should be noted that the federal bribery statute refers to, quote, "official," and not, quote, "substantive acts." End footnote. The White Paper states that no mention of the, quote, "asserted pledge" was made during the meeting. It is interesting to note, however, what was said. Parr is certain he and Nelson told the president that they supported him. In addition to a reference to another meeting with the president and to AMPI's next convention, the president in turn told them, quote, "you people must have a real good organization. I have heard some very good things about it," end quote. Colson's memorandum and the White Paper should be compared with a recent statement by the president on his knowledge of contributions to his campaign. In a presidential news conference on October 26, 1973, the president made the following statement with respect to his knowledge of particular campaign contributions. "In terms of campaign contributions, I have had a rule which Mr. Stans and Mr. Kalmbach and Mr. Rebozo and every contributor will agree has been the rule. I have refused always to accept contributions myself. I have refused to have any discussion of contributions. As a matter of fact, my orders to Mr. Stans were that, after the campaign was over, I would then send notes of appreciation to those who had contributed, but before the election I did not want to have any information from anybody with regard to campaign contributions. 3. Presidential action on dairy import quotas. One of AMPI's concerns at the time they met with the president on September 9 was competition from imported dairy products. In December 1970, after the $2 million pledge had been discussed with Colson and communicated to the president, and after the dairy meeting with the president and additional contacts between dairy leaders and the administration, the president imposed quotas on certain dairy products favorable to the dairy industry. A. USDA and Tariff Commission action. On March 5, 1970, the Department of Agriculture sent a letter to the president recommending a study by the Tariff Commission of imports of certain dairy products. On May 13, the president requested the Tariff Commission to conduct the investigation. On July 28 and 29, 1970, the commission held a public hearing on the matter, at which time the department submitted its views to the commission. In turn, the Tariff Commission made its recommendation to the president in September 1970. While the matter was pending before the president, the dairy co-op representatives met with Secretary Hardin on November 19 and were in contact with William Galbraith, Deputy Undersecretary of Agriculture, on November 20 with respect to the import quota matter. As noted above, the 19th was the same day that Nelson, Parr, Harrison, and Hillings were meeting with Colson, Kalmbach, and Evans to discuss the method of making their $2 million contribution. B. Hillings' letter to the president, import quotas, and the $2 million pledge. Harrison testified that the milk producers had been waiting for a presidential announcement on dairy import quotas for months, but nothing seemed to be forthcoming. Significantly, Harrison said that it appeared to them that Colson, their principal White House contact, was not aiding them in their efforts to secure a favorable decision. Harrison and Hillings, a friend of the president who had succeeded the president as congressman from the president's California district, apparently decided to take action by writing a letter to the president. Hillings' letter dated December 16, 1970, began with the following discussion of AMPI contact with and support of the president. This letter discusses a matter of some delicacy and of significant political impact. Since January 1, my Washington partner, Marion Harrison, one of your 1968 Virginia co-chairmen, and I have represented Associated Milk Producers Incorporated, AMPI. At the White House in September, you privately met AMPI's two key leaders, Harold Nelson and Dave Parr. You spoke by telephone from the beach at San Clemente to Secretary Hardin and to Harold Nelson during AMPI's annual convention in Chicago Labor Day weekend. You told Harold of your intent personally to address AMPI's next annual convention, a gathering of almost 30,000 dairy farmers and their families. AMPI has followed our advice explicitly and will do so in the future. AMPI contributed about $135,000 to Republican candidates in the 1970 election. We are now working with Tom Evans and Herb Kalmbach in setting up appropriate channels for AMPI to contribute $2 million for your reelection. AMPI also is funding a special project. Footnote: the committee obtained a copy of this letter from John Dean in connection with his testimony before the committee in June 1973. End footnote. The letter then discussed the import quota matter and urged the president to issue a proclamation adopting the recommendations of the Tariff Commission. The letter was signed, quote, Pat. The $2 million pledge was, of course, already known to the president. Neither Hillings nor Harrison nor anyone else connected with AMPI or the White House was able to explain the, quote, special project mentioned at the end of the third paragraph of the letter. Footnote: Although the Select Committee was thus unable to ascertain with any certainty what was meant by the reference to "special project." AMPI, at Colson's request, began in January 1970 providing money to a Washington public relations firm for White House projects, and later paid for the break-in of Dr. Fielding's office. End footnote. Hillings said that he did not intend that the letter be given to the President. However, in a memorandum dated December 17, 1970, from a White House staffer, Roger Johnson, to Haldeman, transmitting the letter, Johnson wrote, "Pat Hillings handed me the attached letter and asked that it be directed to the President." End quote. The White Paper states that, "President Nixon did not see the letter." End quote. It does not say whether or not the President was briefed on the contents of the letter, not an unusual practice, as Ehrlichman pointed out to the Select Committee staff. Haldeman was not able to recall whether the President received such a briefing. In fact, John Brown, a White House employee, in a routing memorandum accompanying the Hillings letter, asked John Campbell, a staff secretary, "to check with Ehrlichman and Colson to see if this should go in, and if so, in what form." End quote. Footnote. This document was obtained from John Dean in connection with his testimony before the committee in June 1973. End footnote. The White Paper states that since the President already knew of the milk producers' pledge at the time of the letter, the only possible relevance of the letter was its effect on the pending import quota matter. Although verifying the $2 million pledge to the President might bear on subsequent presidential action in other areas, such as milk price supports, the President's decision on import quotas alone would be reason enough to scrutinize the possible ramifications of the Hillings letter. It is particularly significant in view of the favorable presidential decision on imports that followed 2 weeks after the letter was delivered. C. Presidential Proclamation on Import Quotas. On December 31, 1970, the President issued a proclamation setting import quotas on the 4 dairy items under consideration: low-fat cheese, low-fat chocolate crumb, animal feed containing milk, and ice cream. The White Paper points out that the quota imposed by the President were higher than those recommended by the Tariff Commission. On the other hand, the White Paper fails to point out 3 significant facts. 1. There had been no quotas on these 4 items prior to the proclamation. 2. The presidential proclamation set quotas for each item substantially below the actual import level for 1970. And 3. Without quotas, the import level of such items would have continued to increase, according to the Tariff Commission, "at a rapid rate." End quote. The actual import levels for 1969 and 1970, the recommendations of USDA and of the Tariff Commission, and the quotas set by the President are as follows. Comparison of actual and recommended import quotas for certain dairy products. 1. Low-fat cheese. Actual 1969, 3,000. Actual 1970, 11,027. Recommendation, USDA, 25,001. Recommendation Tariff Commission, 100. Recommendation President, 8,901. 2. Low-fat chocolate. Actual 1969, 477. Actual 1970, 15,944. Recommendation USDA, 17,000. Recommendation Tariff Commission, 0. Recommendation President, 4,680. 3. Animal feed containing milk. Actual 1969, 9,693. Actual 1970, 27,435. Recommendation Tariff Commission, 0. Recommendation President, 16,300. 4. Ice cream. Actual 1969, 2,588. Actual 1970, 8,006. Recommendation USDA 0. Recommendation Tariff Commission 0. Recommendation President 431. Nelson noted that there was general satisfaction with the President's proclamation. An AMPI press release, quoting from AMPI President John Butterbrodt, dated January 5, 1971, on the President's import quota decision, concluded, quote, "President Nixon's decision is a step toward more stability in our market that will be remembered and appreciated by dairy farmers." End quote. End of section 21. Recording by Linda Johnson.